Today's video is brought to us by sdbullion.com. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, welcome everybody to another live stream. Let's get right into it today because there are a lot of red flags for the US and the global economy right now. More red flags than a Chinese Communist Party parade, but there's one in particular that I want to focus on today because it's one that hasn't flashed red since the 2008 Great Financial Crisis, but it is flashing red once again, indicating that a significant economic crisis is right around the corner. At the same time, we have some significant developments over in the Middle East, U.S. troops coming under renewed attacks. There's a lot of signs that that conflict is going to expand. It is a powder keg waiting for a spark, and we are about to be drawn into a broader regional conflict, which will have some significant implications for the price of gold, the price of oil, the price of commodities across the board, silver as well. But first, let's get into this ominous warning that we received from JPMorgan that 99% of Americans will be financially worse off than they were pre-pandemic by mid-2024. So that is going to be a big problem considering that 2024 is an election year. Let's get right into what they were telling us here. In a Thursday note, the bank's top strategist, Marko Kalanovic, said 80% of consumers, a group that accounts for nearly two-thirds of consumption, has already depleted any savings cushion they may have built during lockdowns. Now remember, U.S. GDP is largely driven by the consumer. So as the consumer is coming under incredible pressure during an election year, the economy is going to begin showing some significant signs of slowing down. What is that going to mean for the Federal Reserve? Well, they're going to need to stimulate. If there's any signs of deflation, any signs of significant slowdown, especially given the politically charged nature of 2024, the Fed is going to come under a tremendous amount of pressure to ease, to print, to create money, to buy the debt. And that is, I believe, what is coming. Back to the article here. It is likely that only the top 1% of consumers by income will be better off than before the pandemic, Kalanovic wrote, pointing to the growing signs of credit card and auto loan delinquencies, as well as Chapter 11 filings. Now, we know from reports from the New York Fed, the consumer credit report that they put out, that delinquencies of all types are on the rise. The consumer is maxed out in terms of credit cards. Those balances are over $1 trillion, record highs. The consumer also now, anybody with student debts, of course, had to begin paying those back in October. So just one more straw on the back of the camel, the U.S. consumer, which is about to break. Now, this chart shows, it illustrates for you exactly how bad the situation is. The chart below shows how by June 2024, every income group except the top 1% is on pace to dip below their March 2020 levels of inflation-adjusted liquid assets in the form of deposits and money market funds. And so you can see on this chart here, if you're not in the top 20%, you're well below where you were in March of 2020. Even the top 20% of consumers by income basically going to be breaking even by June 2024. And only that privileged top 1% who really benefits the most from all of this money creation is going to be still in the green compared to March of 2020. But that doesn't mean that all of these folks, the bottom 80%, they're going to be screaming for more stimulus. We talked recently about that social media rumor that was going around of new stimulus checks and how that spread by like wildfire. And, I think that these consumers, the majority of Americans out there, are going to be clamoring for more government handouts when things get tough. And they're going to get them. It's an election year. Any politician who opposes it is risking political destruction. That's just how this works at this point. Moving on here, JPMorgan estimated previously that excess savings peaked in August 2021 at $2.1 trillion, boosted by government stimulus checks. That has since been whittled down to below $148 billion. That is a huge decline in these excess savings, and they're about to run out. And then also, the strategist at JPMorgan wrote, consumers are facing tighter credit conditions and rising rates, wind down of COVID-era stimulus and relief programs, declining excess savings and liquidity, and multiple years of above-average inflation. It really is kind of a perfect storm for an economic crisis, if you ask me. Now, let's move on to this red flag I was talking about at the beginning of the video, because this one is absolutely, I think, one of the clearest signs that we're on the verge of a major crisis. I actually thought to look this up because of Robert Kiyosaki. Now, I know, this guy's got kind of a checkered history of forecasts, is kind of a doom and gloom guy, but I think Robert overall has it right. Maybe his timing not so good, but he wrote just the other day, or actually today, FYI, bank credit just sold off like 2008. Get some cash out of banks as you need cash. This may be the start of the biggest crash in history. Hope I am wrong, yet no time to play Russian roulette with your life. And then an interesting reply here said, at the same time, central banks are on pace to buy over 1,000 tons of gold in 2023. Is that a coincidence? Well, I don't think so, because the response to this crisis is going to be the creation of huge sums of fiat currency, and likely the price of gold is going to move up. Now, this is the chart of bank credit, all commercial banks from the Fed. And this is actually the rate of change of total bank credit. And you will notice that we are actually contracting in bank credit. This started sometime around August. Looks like August is the first data point, but it has been steadily dropping, the rate of change year over year in bank credit. And that's a big problem in an economy that is addicted to the creation of new debt. You will notice that this chart goes back to 1974. And the only time that it dips below the median line here, the zero line, is in the 2008 Great Financial Crisis. Now, in 2011, there was a small dip, but it bounced right back above. Credit began expanding again. And this time, we are already well below that 2011 dip. We haven't gotten to the lows of 2009 that were reached in October 28th, 2009, but we will be getting there very soon, probably in 2024, kind of coinciding with what JPMorgan was telling us there. And what this means, why isn't there new credit being created? Well, interest rates are too high. So what's the Fed going to have to do? Well, they're going to cut the federal funds rate, very likely. Markets are anticipating that, but also really want to bring down interest rates. I believe they're going to need to get back into the debt markets, buy up all this government debt to drive rates down, to create more credit, because the system simply cannot function without the creation of new debt. That is how a debt-based, fiat currency-based economy like ours functions. And right now, this is a huge warning sign. I mean, if you want to get loans going, you need to bring rates down. Look at what happened in 2020 when the Fed launched their massive QE program. You saw the creation of new debt spiking up very high in 2020 and then also in 2022. But since the Fed has been cranking up rates and pursuing their program of quantitative tightening, of selling U.S. Treasuries onto the market, well, we've seen this number come down, and this is something that they're going to have to act on unless they want the whole system to fall apart in a very big way. And I don't think that they're going to let that happen in an election year. Let me know what you think. If you think the Fed's going to let everything collapse in 2024, put a 1. If you think they're going to try to avert that by printing more currency, put a 2 in the chat. Thank you, Jeff, for the super chat there. Really appreciate that. And to everybody who supports the channel, I appreciate that tremendously. Do me a favor. You want to support the channel like Jeff, super chats are always welcome, but the best thing you can do is share this video, smash that like button, and help get this information out into the algorithm and share it with everybody you know on social media. Now, it's no coincidence, I don't think, that as the U.S. economy is showing signs of a massive crisis, signs that we haven't seen since the last major financial crisis in 2008, 2009, we are being drawn into a major global conflict, one that is likely to play out throughout 2024, because the signs of an escalation in the Middle East are continuing to mount up. We've got this story from December 9th, yesterday. Rocket barrage targets U.S. Embassy in Baghdad's green zone. So it's not unusual for some mortars to be fired in Iraq. There certainly have been a number of attacks on U.S. troops in Syria and Iraq since the October 7th conflict kicked off between Israel and Gaza, but things are escalating. This is the first time, I believe, that Katyusha rockets have been fired at that U.S. embassy. No injuries, luckily, but remember, it's only a matter of time until a U.S. military personnel is either seriously injured or killed in one of these attacks. Hopefully that does not happen. I think one of the best ways to protect those troops would be to get them out of the Middle East. That's just my personal take on it. But one thing's for sure, that is a red line which could bring a major escalation. We heard from Lindsey Graham that he considers that to be a red line. And what is his solution? Well, it's going to be to bomb Iranian oil infrastructure to draw them into this conflict, and that's going to get very expensive. Could likely drive the price of oil and other commodities through the roof as well. So this is certainly something we need to be paying attention to, and should be concerned about. Now, this is an interesting one from the New York Times. Why fears of a broader Middle East conflict are growing in Iraq. So it has to do with Iranian militia groups which are setting up base in Iraq. There's a stretch of Iraq more than twice the size of San Francisco, controlled by an Iraqi militia linked to Iran and designated a terrorist group by the U.S. Militia members man checkpoints around the borders and those sovereign Iraqi territory. The area known as Jurf al-Nasser functions as a forward operating base for Iran, according to one of the dozens of Western and Iraqi intelligence and military officers, diplomats, and others interviewed for this article. So here's a picture of this area, and this very well could be one of those groups that is launching attacks on U.S. personnel in the green zone there. But the fact that Iran has these Shiite militia groups which are beholden to it operating throughout the Middle East, and they are now kicking up their attacks against the U.S., this is not stopping anytime soon. The U.S. just voted to veto the ceasefire in the UN between Israel and Gaza, and that is being taken as a sign by these groups to ramp up their attacks in a very big way. This is from Mer News. I believe this is an Iranian news agency. Iraqi resistance group conducts 11 operations on U.S. bases. So Iraq's Islamic resistance said those operations were carried out using tens of missiles and drones. Again, this is just another sign of continuing escalations in that region. This is an interesting one. Ammo prices set to rise substantially. This is another sign that the global conflict is escalating. And also, if you're a prepper, a stacker here in the U.S. or anywhere around the world, I guess, something you might want to pay heed to. There's an ammo shortage that is likely going to get much worse. Vista Outdoor, a parent company to many firearms businesses, told Newsweek recently that it will substantially increase its ammunition prices due to an anticipated global shortage of gunpowder. And this is notable for a number of reasons. One, it shows that militaries around the world are stocking up on ammunition. A lot of it is already being expended, but expect that number to increase. But also, it's not just the price of ammo that is going to rise because of this. Think of all the things that go into these munitions, lead, copper, the chemical reagents that go into producing all of these propellants and explosives. All of this is stuff that now consumers will not have access to. So, it's just going to get blown up and destroyed. This is going to contribute to much higher inflation as this war continues to escalate. So don't neglect that. You might want to stock up on some of those other metals, the ones that protect all the others. The copper-jacketed lead and brass, you know what I'm talking about. YouTube, listen, don't censor me for this one, please. And, YouTube doesn't always like when we talk about some of these words, so do me a favor, smash that like button, leave a comment down below to help with the algorithm. Here we go. Iraqi resistance, this is interesting, from the Cradle, will fight until last U.S. soldier expelled. And this is a quote from Abu Ali al-Aksari, a senior official in the Kataib Hezbollah faction. So these are some of these Iranian-backed Shiite militias operating within Iraq. This guy says our jihadist operations against the American occupation will continue until the last soldier is removed from Iraq. Yesterday's operation marks the state of a new phase of confrontations, and the coming days will determine the intensity of our responses. Any foolishness from the American enemy will be met with severe retaliatory measures and an expansion of operations. So that's not going to be good when the operations there expand. That is going to lead to the possibility of a significant U.S. response should one of these attacks be more successful than the ones that have been launched so far. Of course, one thing that is guaranteed to increase as a result of these growing global conflicts, despite all the uncertainty out there about what the outcomes of these conflicts might be, how they might escalate, the U.S. national debt, I think it's a safe bet to say this number is going to continue to skyrocket as these conflicts increase. Right now, we've got, according to the debt clock here, $831 billion being spent on defense. We've got a huge amount of money that is going to be funneled into these conflicts, and they are just getting started by my assessment. Now, remember, it was the attacks on Red Sea shipping last Sunday night was one of the contributing stories that caused this spike up in the price of gold to a new record all-time intraday high of about $2,150. Now, since then, we have retraced significantly. I view this current price as a significant buying opportunity in the price of gold, and silver even more so, which is very cheap right now. Gold looking like it is hanging tough above 2,000. Now, does that mean that it won't retrace back into the 1900s? No, it doesn't, although I would view that as even more of a buying opportunity. But I think any drop into the 1900s will quickly be met with purchasing. At this point, I do think that the old resistance of 2000 has now become an area of support, just my take. But what I want to point out here is it was an attack by Yemeni Houthi rebels on Red Sea shipping that caused this spike. Well, look at this story, what we just heard yesterday from the Houthis. They now tell us that they will target all Israel-bound ships in the Red Sea. Yemen's Houthi movement saying it will target all ships heading to Israel, regardless of their nationality, and warned all international shipping companies against dealing with Israeli ports. This is a quote from a group's spokesman. If Gaza does not receive the food and medicines it needs, all ships in the Red Sea bound for Israeli ports, regardless of their nationality, will become a target for our armed forces. Now, it doesn't look like there is any sign of a ceasefire. The casualties in the Gaza conflict now soaring into the tens of thousands, and you can see why this might incense some of the folks in the Arab world there. It is no surprise that this is drawing us into a conflict. I'm not taking a side one way or the other, but if you're American like me, the implications here are we are about to be drawn into a broader conflict. That is the situation that our leadership is creating, at least from my vantage point. And again, I don't think it's a coincidence that this is occurring as we head towards one of the biggest conflicts, or rather the biggest economic crises in U.S. history, probably something that will exceed the great financial crisis in its scope and its consequences. Now, when you look at this chart here, this is that chart of the bank credit from all commercial banks, which again now is contracting, a very, very ominous sign in this economy. You got to kind of ask yourself, what is the Fed's response going to be? Is the Fed going to see this crisis, anticipate it, and try to get out ahead of it and begin printing money before this happens? I mean, that's possible, right? I think they understand that the situation is much worse now than it was in 2008. Almost all elements of the economy are in worse shape, and certainly the levels of debt and leverage, zombie companies, all those problems which were papered over in 2008, they are much, much worse now in 2023, and they're going to be a lot worse in 2024. So to me, the two scenarios here that could play out is the Fed starts printing, they try to get ahead of this, or possibly they wait for a major economic crisis to manifest itself. We might even get a little bit of a deflationary crisis, and then that will be followed by even larger quantities of Fed printing. But either way, if you ask me, whether it's just that the Fed begins printing and they inflate the currency, or whether it be that they wait for a massive crisis and then they use that as the political cover they need as inflation remains high to begin printing money once again, either way, the end game here is massive inflation. It's the only way out of this crisis. It's the only way that they can try to save things. But I have a really strong suspicion that they're not going to be able to kick the can down the road again like they did last time. And of course, when they begin this massive campaign of printing, one thing that we're going to see is the price of gold and silver will be spiking up dramatically, probably far exceeding this all-time high that gold hit last week. And that's why I'm going to continue stacking. And look, you just got to get prepared every way you can. Maybe stack up some of those other metals, as I mentioned. Get trained in protecting yourself. Make sure you're stacking up some food and some water and essentials as well, folks, because it is probably going to get a lot worse. And I see someone in the chat there saying, yeah, more stimmy checks. Well, yeah, maybe you might get some more stimmy checks, but I don't think that the currency that those checks are denominated in is going to be able to buy very much. Let me know what you think in the comments down below. Thanks for watching, everybody. Don't forget to like the video. Check to see if you've been unsubscribed. Some people have been reporting that. If you haven't subscribed to the channel, do that yet, please. That's a great way to support us. And just want to say a big thank you to all of you, everybody. Stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver.